All right. Good morning. Good morning. We are live. Just got to get set up here in the Discord, get all my friends on here, so I'm less lonely. All right. Good morning, Duco. How's it going? Can you hear me? Hear me and or see my screen? Well, let me make sure my screen's shared. All right. You should see it now. I see some eyeballs. All right. Good stuff. I like that. All right, let's take a look. I got to switch this back to pre-market. So I'm resetting this account. We're gonna push it up so we can do the SPY Playmaker trades going forward here. I encourage the lifers to participate in that. So we're gonna walk through those one at a time here. But for the rest of this week, we're just gonna do some equity and some SPY and SPX maybe. Next week, I'm not gonna be here Monday or Tuesday. So Wednesday, when I get back, I have a premium or. We can live trade in premium, but Lee is going to do the market open stream. So Thursday and Thursday I have my live stream in free, and then Friday I have the live stream in premium. So it's a little bit confusing, but we're going to be starting that next week for the SPY Playmaker Pro stuff. Hey, good morning, Adrian. How's it going? SSK Ether Stickman Jenny G. Jenny G, how's it going? Good morning. Good morning. Just kind of waiting and seeing what the market wants to do this morning. So I kind of like CYN here. CYGN is or Syngn Inc. I assume CYNGN. Never heard of them. Don't care, right? What's a SPY Playmaker? SPY Playmaker is Austin's analysis that he does on Mondays on the stream, but he's putting that into an email product and a write-up here in the Discord. I actually kind of like this up here. All right, so what I think I might do here is I might just grab one right off the bat. Let me just see what the volume's showing on this guy. So we got a little bit of a zone recovery. I'll go here. So if this one pushes back up, I'll go ahead and get in. Go ahead and get in. And then I'm going to set my... It's one of those days. My computer's being weird this morning. Sorry. 1537 plus 6% is going to be 1629. So we're going to put a sell order here. 100%, and then 1629 is going to be my target. I'm just going to hit my place order button. And then if that goes up, hits my target, that's my 3%, and I can be done for the day. Boom, right? I'm going to let it cook. See how it goes. Other than that, let's go ahead and see what else we got here. We've got ASTI, not looking the volume on that one. That one's just stagnant. Yeah, this one might be pretty good. Might get bought up and shoot up a little bit, but doesn't quite have the same strength. So go ahead and see. I believe that CYN is going to be the probably the one that gets the most attention. So this is probably the second best candidate in my opinion for right now. This is BIAF, so maybe I'll put these two on a watch list. But we're pretty close to market open, so I don't want to play around too much with a bunch of tickers. This is also a 38-39 stock, so I don't like hanging out with those too much. Yeah, so we'll just hang out. Let me not cover up my chat window. How's everybody's morning going so far? Babu Chris, how's it going, man? How's my favorite Canadian? Well, let me see if... Okay, my favorite Canadian. That's good. Good. All right, let's just pop over here real quick. We got a little bit of a pop on this one, and we'll just see if that's enough to hit my target. Duco, listen. You're close enough to Canada, but you'll never be Canadian. Well, I mean, you could go for dual citizenship, I guess. But it's not the same. I'm sorry, you got to take it up with the world leaders. You're also telling Chag, oh no. We fostered dissent here. All right. So this is getting kind of close. I'm already up. There we go. All right. So I hit my target. Now at this, shut up alarm. Sorry, my alarm is going off. So at this point, right, I used half my portfolio and I got a 6% profit. I should be done. I have a 3% profit for the day in how many minutes? Like how long did I work today, right? I put in 2.5 minutes, 2 minutes and 26 seconds, right? That's how I prefer to trade, because then it's less time that I spend staring at charts and putting in focus, right? This is my side hustle. So, you know, because of that, like, let's just break it down into reasonability here, right? How often would you hang out at your job after your shift and just keep working? Like, you can hang out and talk to your coworkers, right? You can hang out and just kind of customer watch if you wanted. But how often would you just go there and just continue working, right? For free. All the risk. Like, you can get injured, you can get, you know, the place could get robbed, whatever. But you don't have to endure any of that, right? Because once you're done with your shift, you go home. In most cases, you go live your life, right? But what do traders do, right? They keep going. They keep throwing money at the market. They keep staring at charts. They keep, you know, pushing through. Now, I personally am going to keep looking at the chart and the markets and stuff because I'm streaming, right? And because I'm trying to teach you guys stuff. So, you know, it's a little bit different for me. But if this was just, if I wasn't part of this and I wasn't on this stream and I wasn't trying to teach you guys stuff, you know, I would just walk away because there's no need for me to continue to commit effort and risk, right? And 3% compounds insanely well over, you know, 252 trading sessions a year. So, you know, why sacrifice all that? So let me catch up on the chat here. So Got Milk on YouTube asks, if you go for a 6% win, what's your loss? You're willing to accept 2%? So that kind of depends. I have a little bit more of a robust trading plan. So I keep the other half just in case if I really like the stock, like right here, I might grab the other one here soon. I don't think I like it just yet. Yeah, it doesn't quite have the strength and volume just yet, but if we see it pushing back up, I might grab some. Yeah, there we go. I'll go ahead and get in. Now I'm taking a little bit of a risk here because it's not quite strong. I'll go ahead and 1673 would be my sell target on that one. Sell 100%. 1673. All right. Hit that sell order button. Yeah, so it kind of depends, right? Like if I just want to trade super tight, you know, I could put a stop loss right here, for example. And then that would get me, you know, ideally like a 1% loss would be good on half position because then you're 0.5% down overall. Now, obviously, that's going to lead to increased, you know, increased frequency of stop out. And a lot of people are scared of that. But if you really, really think about it, you know, if you take 10 trades in a row, you know, you only need to win 3 of them with a 1 to 3 risk reward ratio in order to be net positive. So if you take 2 trades with half a position at a 1% stop loss each, this isn't where I'm putting my stop loss, by the way. I like the volume on this, so I'm going to let it cook a little longer. You know, if you put half your portfolio into one trade and you don't let it go down too far and you cut it at 1%, you're down 0.5% overall. So if you do that twice, you're down 1% overall for the day, right? So if you take 2 full trading weeks, so 10 trading sessions, the most you could lose in that case, if you adhered strictly to that, would be 9.39% because of compound, right? But if you got 3% wins across those same 10 trading sessions, you'd be up almost 40%. It's 39.39% or something like that. So let me just erase that so I don't confuse anybody as well. So the compounding effect is really what helps us here. And then the stop loss, that risk tolerance, that's entirely up to you, right? The theory is that if you're, let me just move this up here. We'll just draw some lines. You know, if this is where I enter and this is where I want to sell, you know, and I'm waiting for like a little pullback, right? And then I have a specific configuration that I like to look for. If that's where I place my entry, in theory, the price shouldn't be coming back down, right? If it comes back down, I've already kind of put myself in a risky biscuits position if that's my initial approach. Now with CYN specifically, I'm trading the volatility, so I have to let it breathe a little bit, or I want to, I should say. But if I'm just trading it when it's going in the direction I want it to go, and it comes back and goes the other way, I'm no longer doing things that align with my goal of making money. So I can always just exit immediately. And then the stop loss doesn't really matter too much other than what I'm comfortable with. Does that make sense? V. Michelle says, I wonder if peeps on YouTube know what they're getting when they get to watch Pookie stream. Is that good or bad? I'm kind of a mixed bag sometimes. But if you meant that in a good way, thank you. If you meant that in a bad way, I totally understand. We have fun, though. We have fun on the stream. Yeah, no, you're welcome, Got Milk. Here, let me put the link here in the YouTube chat as well. This is free. It's 100% free. Just join the Discord. Hop in here and we hang out all day, every day. I'm the lifetime coach, so I teach all the super stupidly complex stuff, but I try to make it simple. She said the most horrible way possible. She told me so. Yeah, she's probably sending me a DM about it. Definitely good. Well, thank you. I'm glad you guys are here. She called you Judas. Hofsnaggle, hey, how you doing, by the way? I haven't seen you in a while, man. Hope you're doing well. He says, assuming you're using a $20,000 portfolio, 6% is a $1,200 trade, $1,200 in one trade. That's a good day, if you ask me. Yeah, absolutely. Now that is going to be cut in half, right? Because it's only, if I'm only using half the portfolio for one trade specifically, because you mentioned one trade, that would be 3% overall. So you'd be $6,000. But yeah, either way, I mean, or $600. I'm sorry, not 6,000, because of math. And that's just why I take two trades. So if you keep the risk super tight, you know, two trades with half portfolio position isn't terrible, right? If you let your losses go down 20, 30, 40%, and you're using half your portfolio per trade, yeah, you're going to have a hard time. And, you know, the same concept applies. You could, in theory, just use your entire portfolio for one trade, keep a super tight stop loss, and then let the profits breathe. Because you always have uncapped profit potential. It's up to you when you secure profits, and that should be the challenge. That's the hard part. It's not when you should get in. The hard part is just letting your psychology dictate whether or not you follow your plan. And that's where everybody struggles. So I can teach everybody here a very simple strategy in about 5 minutes. It's super stupid simple. I've been working with Death Gun, for example, in the free chat. The kid's been showing up. He was busy with school, but he's showing up. He wants to learn. Made incredible progress over the last 2 days just by practicing one simple thing. And that one simple thing is literally what we're seeing right here. You guys see the small red candle? You see the opening price of the candle, and then you see the low. That's all he's practiced. His confidence is super high right now. I mean, he came in as a hardcore skeptic and just didn't ever think he could do this stuff. And here he is. Like he still knows he has some practice and he's still got a lot to learn, but you know, he's doing okay. He's in a much better mindset. And, you know, he had a net positive day yesterday. That's his first net positive trade that he's had since he started, or net positive day, I should say, you know, since he started. That's huge. And it was literally just because, you know, the simple conversation is just, hey, trading's not going so well. I'm losing a bunch of money. And then we say, well, how's that happening? And you're like, well, my stop losses are too big. And I'm like, all right, well, what can we do about that? And then bam, bam, boom, here we are. So if the market opens, I'm going to watch this one tightly, but I might end up taking a hit on it. That's called the RCT red candle. Yeah, I mean, there's a bunch of different names. It's just a simple concept. It's just don't lose a bunch of money, you know. It just accomplishes a couple of things. I'm actually going to close the sell order here if the market opens up, because I have my hotkeys. I'd rather just sell it. Now that depends if it hits this target in the next like 50 seconds. I won't have to, but we'll see how it goes. I will draw a line though, just so that I know exactly where that target would be, because once I cancel that line's going to go away. HIMS is on my watch to break under $41. Want to see the put contracts after open. Sad boys them. Okay. Yeah, HIMS has had a crazy week. I like that one. That's good stuff. All right, so it looks like we're probably going to hit our target here. No anticipation, no emotion. It's either going to hit or it won't. We got about 17 seconds. Jenny G, TMI random, but my dog has the worst parts. Oh, no. You got to manage that risk, buddy. Ah, there we go. So we hit target. Ooh. Dog farts. All right. Well, it can't be any worse than like one of those. Oh, speaking of dogs, because I was going to mention like Rottweilers that fart themselves awake, because it's always funny. My little dog, we have a Brussels Griffon. It's a little teddy bear with an attitude. It's a brachiocephalic, so it's got like a really short nose and like its skull is like crushed in, and it snored itself awake yesterday. It's hilarious to watch. All right, so if anyone was in that, it looks like it's going to halt or has halted. It just hasn't showed up on my Weeble yet. That's also why I get out on these with smaller base hit targets, because it's nice to run up 9.5%, but you don't want to get caught in a halt in the first 5 minutes of market. So if anyone was in that, I hope you at least secured some profits. And if you're watching this on YouTube, you're going to have that delay also. So please be careful if you're trying this, because this is all fast moving garbage. So I don't want anyone to hurt themselves. Oh, let's look at HIMS. Sorry about that. Ooh-wee. I didn't see how fast or slow that wick was. Were you able to lock some profits on that one? Or is that just like a block fill? Maybe Michelle, true story. There's a ton of value in the free Discord. If you're not in here, you should be. Yeah, the foundation's always free. I'm an open book as far as teaching you guys the basic stuff. Like I said, I'll teach you strategies right now, very simple strategies, and you will still struggle to find success for years, because it's not the shapes and colors that make you successful. It's the psychology. You know, it's no matter how convinced you are that you can follow your plan, actually doing it is quite a challenge for most people. If you're one of the few that can actually just get in there and execute first time every time, I'm happy for you and I'd love to meet you. But you are a very rare breed if that's the case. So psychology is where it's at. You got to study yourself and figure out those default, your unique default responses to certain triggers, and then put specific deliberate plans in place to mitigate the effects of yourself, basically. JWAG, remember that a 6% loss would also change your portfolio value from 20,000 down to 18,800. Yeah. Full porting into any one trade is not a great idea. Full porting, no, because you don't ever want to put everything into one trade, just because, like, we've seen it, right? We've seen random halts, right? A company can literally just push a button. Well, they have to call the exchange and all that. They have to get approved, but they can push a button, halt for 2 weeks, right? Especially these low float garbage stocks. They can halt for 2 weeks straight on news, right? And then, like, on day 13, they can delist, and you could just lose everything. And we saw that one night. I think there was a company that did that. It was like 10 o'clock at night. They decided to halt. So people were holding it overnight. I can't remember. It started with an F. I can't remember which one it was. It was like 3 years ago. And a bunch of people got trapped in it. It fell off like 80%, like right at 8 o'clock or whatever. And then they halted on news and never opened back up. They just delisted. It was horrible. And I don't know if they got sued or not. I can't remember off the top of my head, but it's stuff like that you got to watch out for, because as long as a company does everything by the book, there's really not much you can do about that, because they have the right to do X, Y, and Z. So as long as they file the right paperwork, you're kind of screwed. So yeah, I agree. You don't want a full port. And if you think about it, like, no matter how many or how few trades you take, your overall P&L, as far as a percentage, is going to be a weighted average of whatever the results of the individual trades are. So it doesn't matter if it's like one trade per day over 10 days, or if it's 10 trades per day over, 10 days. Like, you got 100 trades worth, you got 10 trades worth, you got one trade worth. It's all the same end result. It's just a weighted average, and you have to factor in the compound, right? So why take that unnecessary risk of something potentially getting halted and then delisting and taking everything you have? And that also aligns with everything else that we preach. You have to make sure that you're financially secure outside the market. This is not anybody's main job, even if you're up there in the 8 figures, right? It's not my main job, guys. This is my side hustle. So, because if I allow it to become my main job, I'll take it too seriously, and then I'll destroy myself. So you can't do that with bigger dollar amounts. Thoughts on CYN after it unhalts? So it's going to unhalt here probably in the next 10 seconds, or it should, unless they're manually reviewing it. We might see a gap up. There's a lot of strength, a lot of momentum on this one, but there's also, there's a lot of potential for this one to just sell off. Like, it's a low float stock. They don't have a lot of restricted shares. So I don't assume people are going to want to look out for an offering or anything like that. I don't see that happening. But who knows? Like, halts are always a gamble, right? There's no reliable way to tell which way the price is going to go. I would, if you're over allocated, Like, I can't legally tell you what to do, but I can put some options in front of you. I would personally consider ways to reduce that risk or just eliminate it altogether. But I can't, like, that's what I would do. I can't tell you what to do. So if you're a little bit more risk tolerant, or maybe if you're in a smaller position and don't care as much, which is a separate conversation because it's still your money, maybe you can let a bigger piece of it ride. But personally, I like to lock about 75% of my shares if I'm scaling out, right? So for this account, I'm just using fixed 6% profits at this point, just to get it, just to get out of the position, right? Because I don't care when I get in. My job is to get out of trades. We demonstrated that in Chicago. I turn around, face the wall, and then I let Tammy enter a trade without any chart. There was no price action, no volume, no order book, or any of that stuff. It was just, I think we pulled up, what was it, the corporate actions, I think. I'll pull up the chart because you guys are watching this trade, but I think we pulled up something random like the corporate actions. I initially had the order flow and I was like, no, we could use that. So I literally just faced the wall. She entered, I turned around, and it was my job to exit. And it was fun. Everyone else was like stressed out. Austin was stressed out, but I didn't care, right? Because my job is to focus exclusively on that P&L once I'm in the trade, because nothing else is going to matter. Like, no amount of analysis is going to help you at that point. It's just a waste of effort. All right, so it's about 2 minutes past the unhalt, so they might be manually reviewing this one, which is always interesting. Now that means that this could unhalt at literally any time, right? So we have no way of knowing when that snap is going to happen. But the fact that they're adjusting it and that it's had, let me just scroll back here. The fact that this happened yesterday means they're probably going to adjust the threshold to the downside, which means it's probably going to halt a lot more. And what I mean by that is that yesterday's, let me just try to explain this quickly. So halts they're tiered, and they're based on the closing price of the previous trading session. So because this one had a push up into a higher level close last night, the threshold kind of started off high, and then obviously it blasted up 250% or whatever. So what the exchange should do in this case is adjust the threshold down to its more average price, because the price is normally down here. So they'll probably lower the threshold of required participation and or price movement, so that the candles will halt more and more and more as a way to ebb off the participation a little bit, so it's less exploitive. And what I mean by that is basically this is going to probably chop up, or maybe chop down. But at this point, given that information, I think a lot of people are going to try to get out more so than get in. So in my opinion, this is probably going to fall down. It'll probably get like maybe 1 or 2 pops to the upside, but that would be about it. Like, I could see this unhalting and then going straight into another halt. There's a lot of pending participation here. So if I look at the order book here, you can see we also have a couple algos sitting on it. 1794. Yeah, so there's 12,000 units sitting at 1794. So we'll see how that goes. Then there's 1955. I got 26.2K, so that's up here. 1955. Now these are going to move around. These are just indicators for where the price is loaded, right? And then 1950. I always feel like the wheel on Price is Right. All right, so we got about another 30 seconds before the 10-minute threshold. Adrian Inks, thoughts on SPY? Let me just take a peek at that. So it's choppy, right? It's choppy. I do like the idea of puts. I always kind of have this week, but the last 2 days it's just kind of spanked me a little bit. So I think I'm not personally going to trade it, but I'm bearish as hell on it going forward this week. So we got about another 5 minutes on this. We could draw the 15-minute candle, and then I can walk you guys through that approach. All right, we got about a second left. So we'll see if this one's going to unhalt or if it's just going to chill. Also just going to peek over here. This is not the time to start buying this stock, for example. How many people here would try to buy the dip on this? Just a quick show of hands. Put a 1 in the chat if you would, 2 if you wouldn't. Like, how many people would be tempted by this? Just seeing that little buy up right there. JWAG says 1. Adrian's watching for rejection. Good stuff. Charlie says, nope. It's a hard 2, huh? Oh, we're unhalted. All right, so there's a pop-up. And then this is probably going to end up halting again here in a second. See how it kind of staggered right around those levels? This is exit liquidity, guys. They're getting rid of their stuff, in my opinion. 1044. So next one. There's so much FOMO on this thing. Jeez. This thing's probably going to halt and hurt a lot of people. God, I hate seeing this. Like, I can hear their screams, you know? Like, there's so many people that just bought in here. I mean, for their sake, I hope it goes back up, but I don't see this pushing much higher. It's going to fill in and halt the gap. Yeah, I mean, it could, right? So I'm actually surprised it hasn't halted yet. Maybe they adjusted the threshold the other way. But this is insanity. I don't trust this at all. This whole thing just didn't make sense. Yeah, that's great. I mean, congrats if anybody made profit on that, but I wouldn't have touched that. That would be, this is absolute danger zone, and it just halted up again. Ooh-wee. Spicy. That's a spicy meatball. So it looks like the, it's a, oh yeah, no, I mean, that's okay. So it looks like they might have just adjusted the volume threshold. So there's 3 ways that a stock can halt for market participation, right? There's the price range. So, you know, if it's over 10% within a time frame, that can halt. You know, volume, if it exceeds volume, or if there's too much the order magnitude, which is less, it's a lot less common. So like if a broker just comes in and just slams like a 2 billion unit order, like that'll halt, right? Which you guys won't see. It's kind of an internal mechanism thing, and nobody does it. So, so the 2 that we really focus on are the volume and the price range. So in this case, this price candle was 12.08%. 10% of that probably happened over that, you know, short time frame. So we end up with these LUDP halts. And that is just insanity. That's crazy. I mean, if it wants to keep going, that's great. But the volume on that was 2.148 million. The previous candle was half that. The previous candle was just over half of that. And that's where we got our initial halt. So this candle here was almost 3 times. It's like 2.8 times the amount of volume over here at market open. And it just halted. So I'm assuming it's the price range on this one that they must have adjusted. Either way, that's crazy. Oh yeah, SPY, because we're within the, we got about a minute and a half left on that. Okay, so I'm just going to move the box over so we can see that. So this strategy is pretty simple as well. And again, I have no problem teaching you guys super stupid, simple strategies. We're just looking for a 15-minute opening range. And then we'll look for a 5-minute candle close above or below. And then we'll go down to the 1 minute and look for an entry for a directional trade with a low risk. Danger zone. Charlie, so how much of all that was algos trading? Like 99% of that was algos. Humans are a very small piece of that, especially retail. So basically what the market is, it's a bunch of big banks. It's banks and institutional firms. They're all trying to consume each other. So they're sitting down at this poker table, right? They're putting their chips in and they're playing their hands. And we're sitting at the kids' table, you know, and every now and then we try to reach over there and grab a little piece. We get the crumbs that fall on the floor. So we don't really matter. Like, we don't impact the game. We're just too small. You know, even if you were to throw like $6 million at something like CYN, like you'd move it, but it wouldn't be efficient, because by the time you finish moving it, the price would be up here, and then you would become the exit liquidity. So, you know, so you really got to be careful. But what they do is they leverage this order book. So they place a bunch of orders, and sometimes they let some of them get filled, but they'll place these orders here of magnitude to deceive each other. So it's like they're setting little traps, and then they pull them, or they, let's say, here, I'll walk you guys through a very simple, let's erase all this. All right, let's say this is the range that I'm watching as a hedgie, right? And I want this range to break. What I'm going to do is I'm going to establish walls inside, in both directions. And what I'm going to do there is I'm going to set these walls up as tests. Okay, if the volume is strong enough as it approaches this resistance, and I put a wall here to absorb some of that impact, you know, as the price is pushing up, you know, price goes boom, boom, boom. It's like a battering ram. If I can get enough of my orders, my small orders filled, it's a burn rate basically. So if there's enough pressure to chew through those orders, then what I'll do is I'll pull these and I'll pull this one, and then the price goes skyrocketing, right? Now, the alternative here is that if that doesn't fill, or if it doesn't exceed the burn rate, then I double in on these orders and I push the price down. And then I just trade to the other direction. So it's a direction reversal. Does that make sense? And then I just do the same thing down here. You know, and this is how they amass shares. They just acquire them by saying, okay, I'm going to trade short here now, right? So now we're down here. I have a short position. I'm going to try to buy some back or use a different account. And then we'll see if this exceeds the burn rate down here. If it does, the short position up here that I've got can be added to just on the other side of this. This is my commitment that says, okay, now I really want the price to go down. This is how I'm going to make my money. I've got enough shares. My boss is going to be super happy with me. And then there's another guy down here that says, no, bro, this is my entry. I'm going long, right? So I'm going to take all your shares that you've committed here and here, and I'm going to buy them all and then some. We're going to run up to the upside. So it's just a game of this little cat and mouse, you know, liquidity trapping and all that good stuff. But there's a number of strategies like that is horrible. Yeah, that just went right into a halt. Oh my God. So yeah, this is probably the beginning of the end for a lot of people. But again, let's say that you've got this, right? If this is the range, you've got any number of ways you can trade inside this. You could trade the ping pong inside as well as the breakout. And that's a zone recovery strategy, is that you've got increasing position sizes, increasing resources that are just kind of snowballing. And then when the price releases and it goes farther in one direction, it offsets the smaller losses from the absorption. Now, we can't do that in most cases because we're too small as a retail trader. If you're trading with like, I don't know, like 150 bucks, you're not going to be able to do that effectively and control the price. You can certainly do it to an extent, but you're not going to be able to do it too much, right? And that's just a modified martingale, and the martingale itself has a lot of pitfalls because you can't exponentially increase your risk exposure because you're going to run out of capital no matter how big you are. So there's got to be a capitulation point, and there's all these other elements to it that you really just have to be careful of. Let me look at SPY. So I don't want to get too far down the rabbit hole on that stuff, but just know that we as retail traders are not even a blip on the radar. So it's 99% algos at that point on stocks like that. These banks pay millions of dollars. They put, you know, neuroscientists, computer scientists, data engineers, psychologists, all that in a room, and they pay them 6 figures, and they say, build me a machine that can identify all the ways that we can trap people. And by people, I mean other algos, and let's make money together. And then that obviously provides a return on that investment when it harvests massive amounts of money. How much do I trade daily personally? For this stuff, I pretty much lately I've just been using the accounts that I just share everything because I don't. It's just more beneficial to you guys. Like this stuff is kind of just chump change, you know, it's just small account stuff. But I also want to show you guys the power of compounding gains. So these numbers can scale up pretty nicely. So it depends. I mean, sometimes I use a $100 account. Sometimes like this week, I'm resetting it to 500. One week, I think it was like a 2-week period. I turned 50 bucks into like 3,000, for example. Like it changes. All right, so this 5-minute candle closed outside. So now we're going to look at the 1 minute, right? So 15-minute candle. I'll just walk you guys through this. Super simple. 15-minute candle, you just draw the range. 5-minute, you come down and look for a candle close above or below. 1 minute, you look for a low risk retest, which would be a small white candle or bullish candle in my case. So you want some separation, then an approach to the zone, and then a low risk opportunity in that same direction of the breakout. Does that make sense to everybody? I hope so. Because it's all you're getting. I'm just kidding. So what I'm looking for here, right, would be a, let me just move this over here. I would look for a small bullish candle right here, ideally like this size or smaller, right? And I want a threshold here, and that would be the opening price of that bullish candle, okay? Because remember, bullish candles open lower, close higher. And then what I want to see is a break of that direction to the downside. So this candle, not so much. I really want to see a retest. So we'll just kind of wait and see what happens. Now, ideally, the price is pushing up into this zone. If it goes too far into the zone, that's too risky. If it doesn't push into the zone, that's too risky. So this is the one that I want to happen. I want to see this. This would be perfect, right? A retest and then a continuation or a rejection of the zone. Okay. So the fact that this just keeps going, that's great for like momentum breakout traders, but on SPY and stuff like that, that's super risky. Now, I have been trading SPX puts the last few days, but you know, I still wouldn't be jumping into that without a retest personally. There's just too much bullishness. Do I trade the watch list every morning? No, not every morning. We can look at it today though, if you want. Let me grab it. I'll pull it up over here. So Lee had I'll screenshot it and I'll grab it over here for you guys. So it's on the stream as well. And if you guys aren't in the Discord, let me put that up here as well. Oops, there we go. Type today. If you're not in the Discord and you're watching this on social media, feel free to jump in there. It's free to join. And it's better than watching it on YouTube because you don't have the delay. All right, so here's Lee's watch list. So let's pull up CYN. Ooh, actually, let's hang out with SPY for a second. So this is good, right? This gets us into the neighborhood. We've had some separation. We're in the neighborhood. This candle closes in about 10 seconds. So ideally, we get something like that. Discord is missing the boat on a drop to chat screen you have feature. Yeah. I wish Discord would just get its act together, honestly. Like they have so much potential here, and they have a really huge audience. They've got, you know, millions of users, and they just don't fix their stuff. All right, so the reason we want a small bullish candle, by the way, is that if I were to look at the entry below here, for example, and I put my stop loss up here, that risk range would be entirely too big. There's no way I'd want to maintain that. But if I get a nice small risk up here, like this is okay, right? So far, if it goes too much higher, I don't want to be in it. But you know, at this point, I know exactly where my entry threshold is going to be, 608.76 or 75, I guess. So I can start looking for those puts, and I can say, okay, well, here's a 608 put, right? It's currently $72. You know, so let me just look at a 601. I think I used all my buying power, so we'll try it. I don't think it's going to let me, but all right, we got about 4 seconds left on this candle. 2, 1. All right, so I know I'm kind of topic hopping here, but like I'll just walk you guys through it. So right here, I would have just got in right there. Now I used all my buying power, so I can't. But let's look at the 608 put. So it's let's say we get filled at 75 cents. I'd have a stop loss right here. Right? Oh, let me put a vertical line as well. And what we can do actually is we could just pull up the 608 contracts and we can say, okay, well, we got filled at 75 cents in theory, right? Right here. And then it's just a matter of watching this chart, not SPY. You don't want to just look at SPY and say, okay, well, what kind of risk am I willing to tolerate on this chart, right? Does that make sense? A lot of people are just going to stare at SPY. And as you're staring at SPY, your contract value here is just going to go crazy. It's going to be all red and then green and then red and then green. So if we look at the contract itself and we say, okay, well, what am I looking for in this chart? You know, what am I comfortable with? What is good enough for me? What am I willing to accept? Basically, you'll have a much better time in the market because that's going to help you keep those losses smaller. So if my goal is to minimize that loss and I've got a level right here that I can justify stopping out at break even, basically, at the expense of opportunity cost, right? Then I could say, okay, well, from 74 to 71 is 3 cents, right? So if I triple that, go 9 cents above 75, that'd be 84 cents, just as a 1 to 3, very simple achievable base hit. Now it's not going to be huge, right? But it's not going to be a huge loss either. You know, that's a 12% profit. And you can always let that go higher, right? But you don't want to let it go lower in most cases unless you're a sadist, right? So we'll just go ahead and watch and we'll see what happens there. And then I'll get back to the watch list here. I'll put this up here so it's out of the way. So CYN, the entry was above 1330. He posted this right before 9 a.m. So I'm sure he got a much lower entry. And then $14. So I kind of want to look at that chart. Does this SPY stuff make sense? Like, it just makes more sense to look at the contract that's actually going to reflect your P&L. Because ultimately this matters a lot more than just looking at the SPY. You know, SPY is great to look at for getting in, but not out. All right, there we go. We would have been out no hesitation. We would have been out at 71 cents. So you would have taken a $4 loss on that. And you can always get back in, right? But now how many people are going to be willing to take that $4 loss instead of maybe it's down here and it's maybe 2 o'clock in the afternoon and they're like, oh, I'll sell it at some point. Or I might as well let it run down because it's 90% down, right? All right, Michelle, thanks. I'm glad you're able to hang out this morning. All right, so with stuff like SPY, you really can't let it go down super far. You know, if it goes down more than 30%, unless it's like SPX specifically, you've already lost because SPY takes a lot more to come back. You know, so if you're going to take an entry, it's got to make sense, it's got to be justifiable, and it's got to minimize that risk. You know, so we don't want to hurt ourselves too much. So let's just pop over to CYN real fast. Oh my God, just halts to the downside for days. That's great. That's why I get out of those. I can't trust those. All right, so he had 1330 as his entry. Okay. And then his targets were 14, 1450, and his stop loss at 13. So 14. Okay, and then 1450 roughly. And then 13 was his stop loss. Okay. Yeah. So, you know, it was posted at 8:58, and this is the 9 o'clock candle. You know, we had to close just over at 8:59, and the 9 o'clock, the candle just shot up to target 1. A minute after that, target 2, and then subsequent candles like you would move your stop loss up for higher lows, right? Higher validated lows. You might have stopped out right here, or you might have moved it up to here after the fact, or before the fact. I'm sorry. And then, you know, you're in potential alignment for this, but if you didn't get all that, that's okay, right? Because you got your piece and you walked away. ASTI, let's look at that one. So again, this was posted at 8:58 with a level 306, 330, 360. So 306. All right, and then what was it? 330 and 360. All right, so clearly it didn't hit target. Was the stop loss 296. Okay, so 296. All right, so you guys see that risk range? That's a pretty nice risk range. I'd be okay with that. You know, it's better to just take that stop loss right there than to continue holding it and hope it comes back, right? So you don't want to do that to yourself. So you got to respect those stops. Either way, good opportunity, good setup. Let's take a VOR. All right, entry was 120, 130, 140. Okay, 120 and 130, 140 didn't get hit. So what's the risk range on that? 5 cents, right? I'll take that all day. 5 cent loss, easy. All right, so in this case, you might have gotten in. Now, some people like to use like the 2-minute, 3-minute, or 5-minute candle close, which it looks like you probably got either way. So you probably would have entered on that unless you were on the 5-minute, at which point you would have just taken a 5 cent loss. So again, not a huge issue. Much better compared to holding it all the way down to here. You know, that's a 37% risk that we could have avoided by just taking the 5 cent loss. PSTV. I already got some lines drawn on that one. I didn't do that one. All right, 41.5, 44.47. All right, so 41.5. Okay, so up here, we just got a wick on this one, so I'm not even going to draw the rest of the lines. So this wouldn't have been an entry, right? There's no candle close up here. So this one would have just popped over, rejected, and then you wouldn't be in this one. Does that make sense? Let me catch up on the chat here. Should be able to just drag and drop. Yeah, I like FileZilla. That's pretty nice. You can drag and drop stuff into Discord. I don't know about voice chats, but you can do it for regular chat channels or DMs. I do it all the time with PDFs. Do I mostly trade small, mid, or large cap? It depends on what you mean by trade. So I have investments in large caps, and I have some growth investments in small caps, but all my speculation is pretty much small cap, because I mostly just do these small account stuff for you guys. For my other accounts, it's strictly like SPY and SPX, but I don't use bigger positions on those. Charlie says, SPY with the range box you marked, say SPY turns around here and runs up, could you use the top line of your box? Absolutely, you can. So you're talking about using the threshold here to the upside, and the answer is yeah. I mean, it's the same concept, right? If it goes into the box, the likelihood that it'll fill the box is pretty high. And by what I mean by that is if it goes in like with intent, right? Now we're outside the box. Now let's see, did we get a close outside the box? We still have 3 minutes and 20 seconds. So if this candle here closes outside the box to the upside, then that'll change the direction of that directional trade. And then we'll look for another opportunity with another tight contract, right? Again, it's SPY, so you don't need a bunch of money for that. And then you shouldn't put all your money in my opinion. Can't legally tell you what to do, but but it's risky to do that. So if you're on like a $100 account, you wouldn't be trading an $83 contract. You probably don't want to do that. But def 0 day. I mean, I personally like 0 days. I know, was it Just a Tip? Is he in here? He's been absolutely crushing it on like dip buys and stuff, but he's also going 2 or 3 weeks out on his calls, but that requires a lot more capital. So I just like 0 days for efficiency, but and we kind of talked about that in the Rags to Riches stuff. We talked about the outperformance of shorter contracts, but it's how much work you want to put in, right? So if you just want to put in a little bit of work and get a bigger return, but you're okay with it, potentially not working out as well, so you have to accept the opportunity cost, then farther out contracts and letting them ride a little bit is usually easier. And that's what Austin does as well. He goes a couple of weeks out in a lot of cases, but it requires more money. So, don't get caught up. Like, you don't even have to trade SPY at all if you don't want to, if you're not comfortable. You don't have to trade options at all. A lot of people mess themselves up unnecessarily. It's really about what works best for you. And if you can identify something that's not working, like clearly, if you're not making successful trades with options, you can always just paper trade them for a while, get your feet, and then just trade equity in the meantime with super tight risks. But like, hang on just a moment, guys. I'll be right back. All right. Sorry about that, guys. Had to answer something real quick. All right. So where do we leave off? Oh, yeah. So for today, right, if my plan was to use 2 50% trades, both for equity, both with 6% targets, and achieve a net profit of 3%, I've done that. Right? Zero stress, zero motion, minimal effort. Looks like CYN is open back up again. We got about 20 seconds. Sorry, I didn't mean to switch off SPY. We got about 20 seconds left on this one, and then this should, in theory, as long as it closes above this box here, this will be a confirmation or a bullish thesis, and then we can look for a small red candle off this box, and then an engulf, a color change to the upside, and that would be our opportunity. So I don't necessarily want to use this candle, right? It's got to be something that happens after this 5-minute candle closes, because this is the 5 minutes, right? This whole range right here. What I really want to see is a small red candle after that. Sorry, I keep moving it over here and then back because I keep remembering that the camera's on the live stream. So, and the recording as well. So what I'm looking for here is just every minute or so, I'll just check back and say, okay, well, do I have a small red candle here? Do I have a low risk here that I can consider? So I got about 25 seconds left on that one. Rocket Lab is flying. All right, let's take a look at that. It looks like it's flying down, buddy. Maybe I maybe I hesitated here, but it did have some juice on it. Yeah. But it looks like now you're forming, lower candles here. Now we do have a 5 candle run as well, so that's worth watching for potential break to the upside if you're looking for continuation. But again, super tight risk, right? So this candle now moves down, or the line, sorry. Let's look at SPY. So in this case, right, this would be the entry, that would be the risk. That's pretty big, in my opinion. I really want a candle like this. I'd much rather have a risk this size than this size. So maybe we pass on that if it is an opportunity. And sometimes that just means, it might just have enough juice and it might just continue blasting and you might just miss the entry, and that's okay. Right? There's other entry techniques we can use. But it's not worth chasing this one specifically because we happen to be looking at it. So Charlie says, my first 2 options ever were 0 days, and I was a little afraid that I immediately picked up the most dangerous tool in the shed upon arrival. Yeah. And that was just earlier this month. Yeah, 0 days can be, they're definitely a double-edged sword, and the one edge is much bigger and much sharper and extends all the way down to the handle than the other one. You got to be very careful with that stuff. So at this point, this is pushed almost halfway into the box. So we would then have to look on the 5 minute. So again, just saying the 1 minute time frame isn't ready yet. So we have to go back up to the 5 minute, wait for another directional confirmation. So another candle to close above or below. And then we can look on the 1 minute again after that happens for a confirmation for an actual entry. So this is a lot of what this process entails, is knowing which time frame to look at, and then waiting for things to happen. So you're letting the chart tell you what to do, which is how it should be, because the chart's always going to be right at the end. But you can guess all you want, but that's not consistent. Oh, Farouk, what's going on, buddy? How's your morning? We already knocked out our trades for the day, buddy. We had two wins on CYM before it got all halt crazy. Oh boy, can you guys all hear me? I hope so. I didn't mute this time. Okay. I like how he asked if I was talking, and then I also asked if you could hear me. So we both ask a yes or no questions. It's confusing. Thoughts on QuantumScape? I like it long term, but you got to be careful with this one because the demand for it is it's reduced, right? So it originally had a ton of potential, and we saw like a lot of attention on it, but this guy just likes to sell off. It's very hard for this guy to hang on to its profits. So for this one, it's very good for short-term speculation and just catching those momentum pops like this, but it's very dangerous to hold long-term. So on this one, I personally would just use directional scalps. So like I was pointing out, this is a good size risk, this maybe not so much, and if the price is strong and moving in the direction we want, we should see plenty of opportunities to get that. So we've got a 5 candle run right here. So this one would have probably stopped out, right? Because that would be your risk range. That's acceptable, right? Then we've got small red candle. That risk range, it's a little big, but it's still somewhat acceptable. And then you've got this one here, which is about the same size, right? A little smaller, acceptable. And then you've got this guy, because remember, this means this was originally broken over at one point, but this risk range is pretty big, right? So maybe we don't do that one. This one here is ideal, right? Price did break over. Now we don't know which one happened first, so this is probably where the low would have been. So maybe that's too big, right? So we really want something like this, where the price range, the risk range is very small and uncontested on the entry candle. And then this one just popped up to the upside. So that's about the extent of what I would trade on that one personally. So if I were to draw that out as a trade using that criteria, I'll just draw this right here. And then like a 1 to 3 risk reward would be right there. So that would be your entry. That would be your stop loss. That would be your entry, take profit, and then your stop loss. And then if you wanted to let some scale, you've got a 5 candle run up here for a partial profit. So you take your initial profit, then a partial profit, and then you'd be looking for a higher low to justify moving the stop loss up. Does that make sense? I just ran through that super fast, so I hope it does. But if you haven't been on my streams, it might not. But if you have been, then that it's a nice clean setup. Yes, thank you. Okay, good. I'm happy to hear that. All right, so let's just check back on SPY because we're another 5 minutes in. So this is just falling back in the range. So no trade to be had there. We can look at Tesla as well. So let's just go to the 15-minute here. This range is huge. And I can already tell you right now that price is not broken out of that range of the confirmation. So we're just compressing. So no dice on that one. We'll just erase all the drawings here. NVIDIA, kind of the same thing. All right, when we go down to the 5-minute here, we see a directional close out here on the 5-minute, which is great. So then we can come down to the 1-minute and say, oh, we pulled too far back into here, right? It's just too far back. So we have to wait for another 5-minute candle close. So we're just going to have to kind of hang out and see where the next 5-minute candle close comes from. And then we can look for a bullish trade with low risk, potentially. So in 3 minutes and 20 seconds, we'll come back to this one, or we could come back to this one. AMD, it's looking a little bit stronger. Let's kick it up to the 15-minute here. That's a pretty wide range as well. And go down to the 5-minute here. We had a bearish close down here, but then the price went too far into the zone. Like it went halfway into the range, which means we need to wait for another confirmation down here before we can start, before we get permission to go down to the lower time frame. Does that make sense? What's another one? We like Uber, right? Uber's always fun. Let's look at the 15-minute. Now this one's got a lot more chop to it, so we got to be careful with this one. Definitely great for like candle actions. So we got our bullish entry here, and the price hasn't pulled back into the box yet, right? So we do our 15-minute range. Let me just change that to a darker color so it's less blinding. We got our 5-minute close, which means we get permission to go up to the higher time frame. So now we can look for a retest, and then something like that. Okay, and we can get the relative size of the candles. Like this would be perfect. So what I can do here is I can just draw this range, and then I can just drag it up here. Let me just, well, it's about the same size of what I already drew, so that's okay. So wherever this starts is irrelevant. I just need to come back here and test this range, and then give me a low risk opportunity in that same original direction. So let's see if we can get that. And the cool part here is we know exactly where our entry threshold would be, okay, if we get that opportunity. So I can start looking at the contracts. So I could say, okay, well, it's around 91.80, just under 92. You know, this is $92 range. So I kind of want to look at the $92 contract. So what I can do is I can say, okay, well, what's an appropriate range for this $92 contract? And since the price is within 10 minutes or so, I can look at the contract chart itself, and I can say, okay, well, what was the contract price at 10.11 on the 92 calls? So at 10.11, the price is around here, $1.03, 88 cents to $1.03. So I can say, okay, well, if the price comes back up there, it should be around there when I get in. And then I can justify whether or not, you know, I wouldn't be letting the price go all the way up there, but somewhere around here, about $1 is where I can start to look for the entry on that. So let's see what we get. Yeah, SPY's Chop City. But that's it. You don't have to look at every single candle that happens, because you can ignore a lot of them. You know, if you don't have if you don't have a confirmation for a directional break, for example, you only have to check back every 5 minutes. So you don't have to look at the 1 minute candles, and you can ignore all of them, right? If you're using the strategy like that, because you're only interested in waiting until you get that 5 minute close outside. Let's take a look at CYN here real fast. I just want to make the rounds here. This is choppy. So this is nasty. This is like ugly. I wouldn't be touching this personally. Oh, it's so messy. So this is just people this is like algos fighting, and then people getting chopped up. You can hear their screams. So like situations like this, if you want to trade stuff like this, you've almost got to just pick a price point. Like let's say 1903, for example. I'll show you what I like to do with these. Just go to the baseline chart, and I just go up here to like, what do we say, 1903? Okay. So I will literally just do something like this. And I'll just look for entries when the price breaks over and an immediate stop loss below. So like what I would personally look for is stuff like this. I would just be like, okay, well, here's that. And then a slightly larger range. And that's all I would do. Like, just if it's going to go up, it's going to go up. If it's going to go down, it's going to go down. And then it's going to hit one level or the other after it hits entry. And, you know, you don't control which way it goes. Does that make sense? Like when things are super messy and super choppy like that, that's about all you can do. And ideally, we're doing this like on a tick chart. So if I pull up the tick chart and I draw that same level, right, it's going to move fast. It's going to look ugly here. Sorry. Let's go down to the 1903. Okay. And then, all right. Okay. That's pretty much the best information you're going to get on something like that. And if you're using hotkeys, like this is going to be your bread and butter. Has anybody used the baseline chart before and ticks? I might start doing this on my live streams more. No? It's probably going to stress you out the first couple times you do it, if that's the case, because you're going to hit like this and then you're, oh my God. Nasty thing. Yeah, you're going to get Lyme's disease in your portfolio. So basically what the baseline chart does is it just takes a price point or whatever, right? You move the chart up and down and you see how it keeps that line in the middle. You just put your preferred price or your level that you're looking for at that level, at the middle of the screen, and it shows you the above and below action. So it's traditionally used by investors. Like you put your valuation point there. Let's say like Apple's 177 or something like that. And then you would, you'd be able to monitor your buys and sells over a period of time based on the relationship to that valuation, right? I'll just switch back to the 1 minute here because that's moving pretty fast. There we go. But that would be it. Like that's the, KOs. There we go. All right. Yeah, simple as that. So let me switch back to the actual candle. Now the downside here obviously is you don't see the highs and lows. Like you don't see the OHLC, you only see the closing price. And that's okay, right? You don't need to see it all. Let me just switch back over to SPY and all those. All right, so did we get our 5 minute close? We did not. So we get a 5 minute close at the bar, and that's okay, right? If it's too close, then it should be just considered not valid, like not good enough, right? It should be clean and decisive. So, in another minute or so, this one might close above, and that's okay. A lot can happen in a minute. But then we'll look for another opportunity there. And again, on stuff like this, we know exactly where the strike price will be on these calls, right? This is telling us to look for calls, and we know exactly where the strike price would be. So it's a very easy way to trade these. I do have to jump off here in a little bit, by the way. We get about 30 seconds. 30 seconds. Oh, I guess I should move this over here. I keep covering the thing with the camera. I'm sorry about that. We got about 20 seconds left on this candle. I'm going to draw the line ahead of time, and if it falls back down, I'll just erase it. All right. We got our yellow line. Or green line, sorry. We got 10 seconds left on this candle. So now I can come down here to the 1 minute, and we can just look for little red candles that occur after this line. So we know the strike because we know approximately, because we can grab the size of one of these candles. We can drag it up here, if it lets me. We can draw the box and move it up. Wide as we will hate me. Oh my God. All right, so anyway, I'll just draw like a 15-cent box. There we go, somewhere on it. Weeble, you're being silly. You're being a naughty boy. I'll draw a 15-cent box right there. So we want that color change to occur inside this box, right? We want something like that. Now 15 cents is pretty big, so let's kick it down to about 12 cents or something similar to this. Like this would be a good opportunity if it was over here. So because it's before the line, it was still part of that 5-minute candle close. So we can't really use that to justify an entry. But because we have a range here that we can look for, we know that around 609.50, aka 610 and higher, would be ideal for one of those low risk entry opportunities to the upside. So if we get it, great. If not, that's okay too. The main point here is we're letting SPY tell us what to do rather than trying to anticipate and guess and be frantic, you know. So we're using a mechanical system. So we'll wait and see. I'll give it another 8.5 minutes, then I got to jump off of here. And before then, I'm going to just open up I got to fill a little form here. Let me just grab that real fast. All right. Click all the buttons. I love it. All the buttons. It is Thursday. And we'll do one of those. Do one of those, one of those. Sorry, guys. It's just a bunch of buttons I have to click. All right. We'll pull up the Discord here. Yeah. Oh, let's see. What do we got? We got a profit screenshot. What is this? What do we got? Is this Duco? Is Duco making profits? When did this happen? I'm just kidding. 2.6% for the day. Dude, that is awesome. And you're done. You're close to 3% for the day. That's good enough. You're leaving it as is. Grinding more tomorrow morning. Beautiful, man. And I want you to really, really take note. Let me just highlight this real fast. Take super, super special note of this number right here. This guy. Right? So you didn't use all your cash and you're walking away for the day. And that's beautiful. Because that means that the cash you did invest in, you did expose to risk, was efficiently used to the point where you're able to walk away with a profit that still met your goal, right? So that's what I did with my first trade. I used half the money that I planned to use, and I hit my goal on that first trade, so I could have been done for the day. I could have just walked away, right? But since I'm streaming and because you guys like more trades, I'll go ahead and take more. But you don't have that responsibility, so you were able to use a smaller portion of your money and hit your goal and walk away. So I'm proud of you, dude. Take your penny and move it up. How confident were you today in your trading? Ooh, we're getting kind of close to the zone. It's got to really pull back though. I don't want to see it. I want to see it push up too high. And if it does, again, that's okay, right? It just means there's too much strength to the upside for it to have pulled back and given us a healthy low risk opportunity. If it does that, if it just blasts, so that's okay, right? That's too high risk. So we want to just wait. I would rather wait for more confident setup. Because remember, no position is still a position. It's a good position. Chinga, not confident at all. I need help. All right, let's take a look. Click on my issue. Okay, let's just pull it up here. I was watching VOR. A move over 120 could give us a nice opportunity to scalp to 125, 132, 140. Okay. Frustrated. What am I doing wrong? I bought after I saw this message at 120. Now it's going down. I saw it was up earlier today. All right, so let's pull up VOR. We're gonna help out Chinga here. All right, so on this one, let me just grab that watch list as well. Okay, so you had. Let me plot your levels. Right. Let me. I can't see the chat, by the way, because I'm looking at the watch list and all that. So you had a line at 120, I assume, for an entry. And then 125, 132. Okay, so 125, 132, and then 140. Right, that's what you were shooting for. Okay. And then let's look at the watch list, because I think it's what you were using to justify that. And then Lee posted, okay, so he had entry above 120, targets at 130, 140, and a stop loss at 115. So that's the one piece I'm going to draw here. Okay. All right. So if you want to use like the 2 minute, 3 minute, whatever, we kind of covered this one already. Regardless of what time frame you use, except for the 5 minute on that one. You did get a candle close above. Okay. So everything was there, right? You had increasing volume. You got every confirmation that you should have taken that entry, in my opinion, was there. Now, let me ask you a question, because there's a critical piece that I want to make sure that is in the discussion here. Did you stop out of that trade at or below 115? Or are you still in it? There's no wrong answer here, so just be as honest as you're comfortable being. It's okay. But in this case, you know, even if I entered that one, I would have taken a loss. That's just the way it works. You're still in it. Okay, you put a limit sell at 125, so you're trying to break even or make that initial target back. Okay, so let me ask you a question. Okay, what do you think takes people out of the market? Is it losses or is it profits? And it might seem like a silly question, but I really want everyone to internalize this. Yeah, what do you think forces people out of the market in most cases, given that 90% of traders fail in their first year? Loss of money, right? So is holding this position below the stop loss and all the way down to here to like almost a 50, or what's that, like a 40, 37, 38% loss, 40%. Does this kind of drawdown align with your goal of making money in the market, or does it expose you to that potential of getting washed out by taking too many losses? Yeah, too big of losses, yeah. Right. And again, it might seem like a silly question, but sometimes people just have to kind of, you know, hear it a certain way. So you should, well, I can't legally tell you what to do, but Lee puts the stop loss nice and tight for that reason, because for that type of trade specifically, what he's looking for, you see this high right here? He's looking for a break over that high. Okay, because he wants the price to continue going in that direction. And what happens is when it reverses and it goes back down like it did over here, that turns into a rejection, right? So he's waiting for the price to break over this high, right? This previous high. He's waiting for the price to just blast over that and clear it and keep moving. And in this case, it did, but very briefly, and then it slammed back down, which turns us into a liquidity, because all the people that shorted here, you know, they have their stops here, but they also want to double down sometimes. So if this gets over, if you get outvoted here, right, and the price slams down, it's going to be that much harder, because you also got all the people that just bought into this this breakout, right? So it's going to just trigger a massive catalyst to the downside, which is why we want to keep our stops nice and tight on those specific types of trades. You know, and like CYN, for example, he had this one on the list as well. You know, I think his was it 1330 or something like that. It's the same concept. Like he was looking for a break over this high and just a push over that level into these nice close targets, but his stop loss is also right here. Right, I got to color code these for you. Sorry. And then you got the two targets. Right, so you've got the exact same setup on two different tickers. Okay, you got CYN and you got VOR. Same exact setup. These are just breakout trades with two different end results. So if I put these side by side, or top and bottom, I guess, let's do that. VOR. Okay, they're really not much different in that you've got, let me just line these up for you as well, just so you can kind of see. Now it's going to be a little bit harder to see on, I think I'll go to a different time frame on VOR just so you can see it a little bit more cleanly. Yeah, that's going to be so tight. Sorry. But either way, you've got your high here that you're trying to break over, and you've got your high here that you're trying to break over on CYN, and then you've got your actual break on this candle, and you've got your actual break on this candle. So up until this point, you know, if I move these over, these are the exact same thing. Does that make sense? Like it's the exact same setup. You're just looking for this level to get broken over. And then what you've got after that is just two different end results, right? This one happened to move up. This one happened to move down. Okay. So it really, like, you don't have access to that information, that last part, and you don't have any control over it either. The only thing that you have control over is your risk exposure. How much and for how long are you exposed to risk? And that is the only thing you have to focus on at the end of the day. So if I come back here to the 1 minute and I pull up VOR again because it switched, there's every chance that this might come back up, but there's also every chance it might sell off. I don't have access to that information. So if I were in this position and I was down, from whatever, $1.20 down to 97 cents, that's about almost 20%. I would probably just pick a level here where I feel, comfortable cutting it at and saying, okay, I can give it a little bit of room to breathe, but I don't want to give it too much room where it's going to just make that loss even bigger. So personally, I would pick like a red candle or something like that. And that probably would have just been it for me personally, because again, at any point, the stock can only ever do three things. It can go up, down, or sideways. So if I want the price to go up, and I know that it needs to get up here to get back to my break even, and it's going down, that puts me in a position to have a little bit of stress, right? Because what happens, I'll run through this super quickly. Everyone who's in Chicago and everyone who's in my lifetime streams is sick of hearing about it. But the way the brain works, right, is you've got 9 little voices in your head, and they're all associated with a specific part of your brain. So let's take the visual cortex and the ventromedial prefrontal cortex, which is basically your ability to recognize patterns and to see things, right? So it sees candles, it sees patterns, it sees shapes and makes us, it sends that information off to your hippocampus, right? Your hippocampus is like your library of references. It's all your stored memories, experiences, not emotional, just your objective, declarative memory. So I'm getting a little bit complicated here. I'm sorry, but it's going to go to the library and say, "Hey, librarian, what is this? What can you make of this? How have we run into this before?" And then your librarian is going to look at all the previous experiences, which are mostly huge and traumatic if you're taking big loss after big loss, and it's going to say, "Okay, well, this is what I've got." Right? There's no bias at this point. There's no panic just yet. It's just recognizing something, and then that sends it to the anterior cingulate cortex, which is the part that weighs, compares things. Right? So in this case, your hippocampus has formed an expectation. Right? It says, this is what we should see based on what I've seen before, right? Shoots it over to the ACC, and then the ACC tries to figure out if what it's being told by your, by what it's actually seeing versus what the expectation is that it was told, if they match or if there's a mismatch. If there's a mismatch, it sends a panic signal all over the brain and all kinds of crazy impulsive stuff happens. And that's where we get the fight or flight. Basically, we get the fight, freeze. That's also when we get analysis paralysis. We just hesitate, or we can be impulsive and get angry, right? Or we can feel sad and regretful and all that. Because at the same time, your brain is sending the information over to the hippocampus to pull up the objective stuff. It's also shooting a message over to the amygdala, which is blind to the outside world, and says, "Hey, what kind of memories do you have for this emotionally?" Right? And if all you've taken is big loss after big loss after big loss, its response isn't going to be good. And then that's going to attach a bunch of, anticipation of traumatic memory, traumatic emotions, right? And that automatically kind of skews your perspective, and that just feeds into that cycle of escalation. And that's why we double down, we panic and, and all that stuff. So there's a lot more to the process. I don't want to go super, super deep into that stuff, but just know that when you have a conditioning over a prolonged period of time of just traumatic loss, your brain doesn't really know anything else. And it's very stressful, but it's familiar. So you kind of default to that, right? And you start getting more comfortable holding into the red and be like, well, this always happens, woe is me kind of thing. So what we kind of need to do is we need to change the conversation. We need to give the hippocampus something different. We need to give it something to dilute that pool of references from. And that's why I always encourage people to practice just looking for these small red candles. Just find them. Just identify 5 per day. Just give your brain something else to remember, right? So that when it's time to look at those references, it can find these instead, right? And what that does is that takes a lot of the emotional charge out of it, and it also gives it a better frame of reference when it forms that expectation for what you're seeing. And then when you're up here, and this is just stuff you don't know, and that's okay, right? You don't know what you don't know until you know. So when you're up here and you see this confirmation happen, there's an expectation, right? Your brain gives itself dopamine in anticipation of getting a reward. And actually, when you're watching these levels form, there's also another surge of dopamine. but that's a different conversation. So when that expectation isn't met, like let's say you come down here and you hit your stop loss, you get a fall off, you get a dopamine gap, right? So then there's a little junkie in your brain that loves dopamine, and it's like, hey, I'm still getting my fix. And you start breaking into houses and stealing copper pipes to get that dopamine. So there's multiple ways we do that. We try to relive the outcome that we wanted, and we say, oh, well, it can come back up. Like we start putting our brain into a position where we can't follow, and that increases the stress levels, right? Then we start compromising and justifying. Like, okay, well, we've got XYZ here, and it'll bounce. It's due for a bounce. This is just it's panic selling, and they're going to buy the dip, right? And there's all these different weird justifications that we originally had no part. We had no reason to think about when we were in this initial trade because we had a different outcome expected. Okay, so what this leaves us with is a stress that's dependent on the outcome rather than the validation and the reward that's based on the successful execution. So that's why, if you're not praising yourself for stopping out of losing positions equally in comparison to how much you're praising yourself for taking profits, you're going to reinforce that bad behavior through kind of absent self-parenting, if that makes sense. And I know I'm rambling a lot here. But you have to praise yourself for, doing the right thing and focusing on that education, not just to help you feel good, but because it reinforces that neurologically in your brain. Like you have to teach your brain how to brain in terms of the stock market, because the stock market is set up to exploit those default behaviors. So, you got to protect yourself from that. So somebody give me, we'll do this just for fun, right? I'll show you guys the result here. I got to do it really fast though, because I got to get going. Somebody give me a random ticker. We like this. This is my fun part. Alt ALT. All right. So immediately, right, my eyes are drawn to this right here. Not because of the overall trend, but because of the size of this risk. Does that make sense? As soon as I pulled up the chart, zoomed right in on that. Right? That's the goal I want to get to you guys. Got another one right there. Got another one right here. To me, this and this are exactly the same. They just have two different outcomes. Does that make sense? Like if I look at this one without seeing what happened afterward, other than maybe that one candle, and then I look at this one with the same intent, they're exactly the same in that they're a small red candle. Okay. This one's a decent sized red candle. It's pretty big compared to the other ones, but that's okay. This one's too big. This one's perfect. Right? Small red candle. I love it. This is too big. This is perfect. This is perfecter. This is too big. These are all way too big. So just little stuff like that, we can do. Now somebody give me a random number between 3 and 3.5. I'm sorry. 3.1. All right. So I'm going to just zoom over here so we don't see anything. I'm just going to draw 3.1 here. Okay. And that's going to be my blue line here. So what's 3.1 minus 1%? 1%. It's going to be 307. All right. So we'll do 307. Okay. And then what's 3.1 plus 6% is 329, roughly. 3.29. And those who have been on my stream know exactly what's about to happen here. All right. So I've drawn my 3 lines. We're going to start the day. And we're going to do one very simple thing, and we're going to do it consistently, right? We're going to say, okay, every time the price breaks over 310, we're going to enter. Every time it hits 329, we're going to secure profit. Every time it hits 307, we're going to take a loss, right? So let me open up my notepad here. All right. Actually, you know what? We'll do it over here first. All right. So that's a winning trade. So that's a W. Okay. That one wouldn't have got filled. This one would have got filled. That would not have gotten filled. Yeah, that wouldn't have gotten filled. So that would have been a loss. Okay. All right. We have to back test with integrity. Okay. Just because it looks like it's close doesn't mean we would have got filled. This one would have been a win. So let me color that. And then it looks like we didn't come back. All right. So if that was my strategy, just a simple 1% take profit, 1% stop loss. And let's say I started with $100, right? We would have $100 plus 6%, minus 1%, plus 6%. Does that make sense so far? Like if I just picked a random price point, just used a random take profit, and just used a random stop loss. Blind buys, blind sells, right? Zero emotion, zero skill, essentially, other than just pushing a button when it matters. So if I started with $100, plus 6%, minus 1%, plus 6%, that would bring me up 11.24% for the day if I took 3 trades. Does that make sense? Let me just close that out. So I don't want anyone to really get too hung up on any specific strategy. That's why I teach these so easily. Like I will just shove strategies down your throat because it doesn't matter at the end of the day. In the way that people use them. Like people use them to try to predict, and then they struggle psychologically and emotionally because they're not always right, and they try to avoid losses. So rather than avoiding losses, we can just make them small and insignificant and embrace them. And if you successfully manage your risk, like if I take this trade right here, and regardless of the end result, if I exit my position at this level or at this level, that is a successful management of risk. I've done my job because I'm a professional manager of risk. I'm not a professional guesser. Oh, hey, what's up, Streamlover? Sorry, I just saw your message there. So once I'm in, like this level and this level are exactly the same in that they tell me to get out, right? So when you're looking at VOR, and again, you're new to this, so it's okay. You have to accept yourself as a human as well. You're just not going to know how to do all this stuff. It's okay. And I see, someone else put a stop loss here, right? And I'm down here wondering what the hell, like, why not? Why am I not figuring this stuff out? A lot of it's just because you just aren't equipped yet, right? Because you haven't developed the skill set and the practice to be able to prioritize this level, right? Most traders prioritize these levels up here because they're the ones that give their brain that reward that it's looking for. So we have to view these the same way as this, and just understand that this one, and this one are all exits. Okay. Anything that happens below this line, anything that happens above these lines, depending on which one I take profits at, is unnecessary risk, and I shouldn't be in that trade at that point if that's my plan. Right? Now, I don't care which one gets hit because my job is just getting in and out, right? The profits will work themselves out if I trust the process and it makes sense, right? Chinga, I wanted to win. That's the struggle, man. That's what everybody wants. They want to win because that's what okay. Let me go back to the neuropsych side, right? Outside the market, over the course of your entire life, you've been conditioned to believe that if you do the right thing, if you put the extra effort in, you'll get rewarded, right? We use that. That's our big evolutionary advantage, is that we can condition ourselves to be more and more efficient and stay out of harm and secure resources and all that. Like it's an evolutionary advantage, right? So you'll go to work, you work overtime, you get paid more, right? You give extra attention to your spouse, you get more love, or you get a better relationship, right? You spend more time with your kids, they grow up more, adapted to society, ideally, right? You spend more time in school, you learn more, you get a better paying job. So all these things, you practice more at sports, you do better at the big game, right? All these things condition us to believe that more effort leads to more reward. And that lets us attach our identity to the outcome rather than the process. And that's where we hurt ourselves. So we have to hijack that conversation early on and say, okay, well, I am not a professional guesser. I don't really care about the end result. I just need to focus on consistent execution, just like an athlete, right? You don't want to go up to the plate and assume that every time you swing your bat, you're going to get a home run. You have to prepare for these curveballs. You have to prepare, when is it appropriate to not swing? And you do that by using that library of references of all the pitches that you've accumulated in practice. You say, okay, well, this one's going a little off center. This one's flying right at my right at my face. What do I do here? When you do make contact with the ball, it's just a library of movement that you've developed over time. It's a skill set. Sorry. Nobody just walks up to the plate in the middle of a Yankees game and just knocks it out of the park as an amateur, right? You have to show up to practice. You have to put in the time. get used to swinging the bat. You have to get your posture right. You have to know yourself and identify your balance and all that good stuff, and really just show up to practice, because there's the goal when you're at the plate and the stadium's filled and you got all these extra stresses, right? You have to swing the bat exactly the same way you swung it in practice when there were lower stakes, because that's when you focus on the execution. So if you get up to the bat, to the box, and you swing that bat, whether or not you make contact is irrelevant. Your coach might be whatever, but that's outside pressure. If you do your best, you swing that bat, you plant your feet correctly, you pivot, you do all the stuff you're supposed to do. Even if you miss, okay, that was the best swing you could do in the moment, right? And it made sense in the moment based on the information that you had available at the time, and you get one of two end results, right? You either make contact or you don't. But your job isn't to control the outcome. Like once you hit the ball, you don't control where it goes. It just goes, right? You can kind of set it up to go in a certain way depending on how you time everything and all that, but you're not able to fly up in the air and just move it back in bounds if you accidentally bump it out, right? So it doesn't work like that. It's not angels in the outfield, unless Christopher Lloyd's in the audience here, but I doubt it. So your job, again, you're responsible for everything that happens up until the time you make contact with that ball. Then your job is to get to base and get out of danger so you don't get tagged out. All of it makes sense. That's good. How long have you been here, by the way? I've seen you around, but I don't think we've chatted yet. This is all very, very adjustable mindset stuff. Thank you for explaining the obvious. You don't know what you don't know. That's okay. Maybe 2 or 3 months. Well, you showed up today, right? And that's what, we're in the same space today, so we can have this conversation. And that's the value in showing up. So I'm glad you're here. I would like to see more of you in the free chat. I've seen you around. I just don't think we've chatted a whole bunch. I've been working with Death Gun in free as well with the red candle stuff, and I will explain that here in a second. Sorry, NTN, I just saw your message. Can I explain the little red candle again? Yeah, so if I just pull up a chart, okay, I can get kind of a relative sense of what a big candle is versus what a small candle is. So this is a big red candle. This is a big bullish candle. This is a big bullish candle. This is a tiny red candle. This is a tiny bullish candle. This is a tiny bullish candle. And what I'm talking about specifically, let me just draw this. And I got to turn the extension off. We're going to fly through this. It's great. Okay, so if that is my candle, right? The structure of a candle is the opening close price of the body, and then you've got the high and low, the wicks. They indicate the highest and lowest price points during that period of time. So mine are white and red just for color blindness and accessibility purposes, so people can see my streams. But this would be a green one if you're just on the default colors. So for a bullish candle, the opening price is on the bottom. For a bearish candle, the opening price is on the top because it closes lower than it opens, so it's a red candle. Okay. The wicks are just the highest and lows. The top is always going to be the highest. The low is always going to be the lowest. So what I'd like to see is a red candle with maybe a small wick or whatever. The wick size is kind of irrelevant here to the upside. What I really like to see is something like this. And we can just move this over here. Okay, so this is what I'm looking for. So what I'm focused on primarily is the opening price of the red candle to the lowest price that the price went after that candle opened before it broke back over that price. Does that make sense? So as soon as this candle opens, it starts a clock. Okay, the price will kind of putter around, do whatever it needs to do. At some point, it's going to break back over that price. Like as soon as this candle closes, that watch starts, right? So it can go down here. It can go even lower. Either way, it's going to come back up on one of the next candle or next couple candles. That's when that watch stops. Does that make sense? So that's my entry price. So the only thing I need to pay attention to between those 2 points in time is how low the price went between them. So if let's say this wick was all the way down here, that would expand my risk range, right? And the idea here is that we're watching the price swoop down, okay, to some level. Let me just move this up here. We're watching the price open, close lower, swoop down, indicating that the bears are in control, and then we push back up over that. We conquer that initial stronghold there, and then we move to the upside. So the price should continue moving in that direction with that theory in mind, that concept, right? So if it goes back down, we don't want to be in it, and that's what our stop loss is for. It's a nice tight stop loss, so we just get out of the trade because it no longer makes sense, right? So in this case, we then just need to find a risk range, and we can do that by assessing the size of this risk and then using some multiple of that and then asserting our target. All right, does that make sense? Let me catch up on this. Wrong Christopher. No, it's the same one. There's the one and only Christopher Lloyd. When I use the baseline chart, how do I determine where to draw the white line? So that's just kind of it doesn't really matter at the end of the day. Like if for example, like this is my small red candle, like this is a perfect example of what I was just talking about. Stead lines, right? So what I would do is I would draw a line here at 98.83. So if I switch over to baseline real quick, I've got my line here. I just need to move that up here and then kind of scrunch it down because it's going to move pretty fast here. So I can also put my stop loss wherever, like it would be right here as an example. And then my take profit would be somewhere up here, right? Some multiple. Oops, erase that. And then what I could do is I could come over here to my, if I wanted to use ticks, I could use a tick chart and just watch the price, fly up and hit that if it wants to. So it's at 102, 98.83. I'll just keep track of these numbers here. 98.83. Sorry, it's a little harder to set up the tick charts here. 98.83, and what was it, 101, I think, or 103, I'm sorry. It was 103. 103, and then what was the 97.3 or something like that? Something like that. And then it would just be watching that that price go up and down. Boom, there we go. Target hit. We would have been out right there. Does that make sense? This is a really good way to kind of condition yourself to pay very close attention to the stop losses, but it's a little bit more complicated to set up. Sorry, let me catch up on these. Farouk turned 55 yesterday. I told my friends about you at dinner. About Charlie. Charlie's awesome. Oh, that looks amazing. Let me just slap that on the screen real quick. It looks delicious, man. Maybe not when I zoom in, but it looks delicious. Good stuff. Pretty swanky place. You got your California scenery out there. I know he can't see this, and that kind of sucks. I like talking to him. But yeah, happy belated, man. All right, yeah. So, yeah, let's all wish Farouk a happy birthday. That's 55 is a good one. Congrats, man. That's awesome. That is beautiful. But unfortunately, yeah, I do have to jump off of here. I appreciate you guys all hanging out. Let me just I gotta update my form thing. I'll give it about another 45 seconds or so. You did it yesterday like good friends do. I'm sorry. I didn't know. I'm an absentee. No, it's awesome, man. Congrats. He's doing well. We like it. Yeah, Adrian says she bullies me. I want defense. All right, I got to jump off here. I appreciate y'all. Jinga, I definitely want to work with you some more. I will see you more in the free chat, hopefully. We'll go from there. And this is, again, don't focus too much on the shapes and color stuff. That's the easy part. It's the psychology. So again, your job, just to wrap it up for everybody here, your job is not to be a professional gambler. It is to be a professional manager of risk. And regardless of what you use to get into trades, whatever strategy or justification, that is far less important than your reasoning for getting out. Okay, so if your job is to manage risk and make money, you need to make sure that your risks are sensible and justifiable and that you don't get in your way and that you are accepting enough of the profits you're able to achieve consistently, because that's what's going to lead to compound growth, and that's what lets us grow accounts of all sizes. So, all right, I appreciate y'all. Let me end the recording here. Thank you guys who are watching the stream. Appreciate you, and we'll catch you next time.